That everything you're going to say now is a contrast. Regarding the agenda, I just want to make aware that you also know when you scan your badge at the background, you can register for free for our workshops today. And the next one is already in 5 minutes. It's the power of remote work in a post-pandemic era. It's just around the corner. And the next one is at 11:40, build your mental wealth team with your own mastermind group. Before we come to the next talk, I want to ask you a question. Who of you knows any of the companies I'm going to mention now? Times Group, ITV, or Pro7Z1? Who knows some of them? I think Pro7Z1, minimum in Austria. Imagine these are your investors, but not invest money in you. Imagine they invest immense media reach in you and all the millions of people they reach day by day. Imagine that is the worth you get from them. The next talk is focused on the media of growth. And before we have the fireside chat with Chris Sheldrick, who raised $80 million worth of media, we get a few insights into the report State of Global Media for Growth Funding by Diana. So please, Diana, come on stage. She is the founder of Media for Growth. I would say that's a very good company name for your topic.
Thanks, Hans. Can everyone hear me all right?
Diana,
great.
The spotlight is yours, and I'm very excited about the insights.
Great introduction, by the way. Thanks so much. Good morning, everyone. I'm so excited about this upcoming chat with Chris. I think we've been planning it for quite some time, and I know Chris for a while, and he's such an inspirational person, and what he built at What3 was, I think everyone should hear about that. But before we go into the conversation, I just wanted to establish what Media for Growth actually is as a financing option, and I think a lot of us here, a lot of startup founders, if you are in the market for fundraising, I think you should know of more diverse funding options such as Media for Growth.
You're an awesome person. Sorry.
So probably everyone knows of Zalando. It's one of the largest e-commerce fashion platforms, not only in the DACH region, but worldwide right now. I think timing is such an important and unfortunately less predictable factor when it comes to the success of a company. They started just 2 months before the financial crisis in 2008. And just 1 year later, they closed a deal with 7Ventures, which is ProSiebenSat.1's Media for Growth arm. A couple of years later, they increased the sales revenue and they expanded from just a few countries in Germany when they had their first media campaign to all around the world. Pinterest, probably some of you are using this social media platform to save recipes or maybe things that you want to buy, clothing. They chose the UK and Channel4 for the first TV campaign a few years ago. And since then, they've done it again and again. I think the most recent one just aired a couple of months ago. Pinterest IPO'd in 2018 or 19 with almost $12 billion company valuation, and is probably the highest profile of a social media company on US stock exchange after Snapchat. And About You, very similar to Zalando, but equally successful. They were founded in 2014, and again, they partner with the likes of ProSiebens, and very, very quickly became Hamburg's first unicorn a few years later. What all these companies have in common, apart from a great product execution and just an amazing business model, is basically their approach, less conventional approach to advertising, and that is to partner with media broadcasters in a form of a Media for Growth partnership. That's what we call Media for Growth. Essentially, it's a financing option where companies can receive advertising and services such as TV, outdoor, print, radio, in exchange for equity or sometimes a revenue share. And many, many companies have raised Media for Growth funding over the past few years. Simply put, imagine ProSieben agreeing to do a $1 million TV campaign. They would provide that media to you, and then in exchange, they will receive the equity remuneration of that net media value. But this funding option is not very well known, at least not so much the moment you leave the UK or probably the DACH region. In Central Eastern Europe, there's been some attempts, but so far we don't have a success story as probably we have in the UK, and Chris will tell us about that in just a bit. So we basically started asking ourselves, how are these companies doing who actually raise media for growth? What are the most active players? And can we look at media for growth at a global level? What is the state of this industry right now? So I hope you can see from the chairs. I think it's actually quite important to probably look at some of the next slides. We put months of work in trying to research this space, which unfortunately is a bit scattered and the access to data is quite limited. So we've done our best. I'm sure we just scratched the surface this time. So media for growth, you see on the left side the growth in the number of funds. It actually emerged during the dot-com bubble, which I don't think it was just a coincidence. And we'll see in the next slide why it's so much impacted by the macroeconomic factors. But what's quite interesting is that aggregate media in Sweden, they are indeed the pioneers of this model. But they have a quite interesting and innovative approach. They aggregate media from different partners, and their model is very similar to a VC fund. The first publisher to do so and to actually start investing pretty much of the balance sheet and with their own media is Brain Capital International, which is a Times Group venture arm. And they did this in 2005, since then investing in over 900 companies, including What3Words. Another interesting factor to see here is how the progression of these funds and the raise of CVCs, the corporate venture funds, are actually proportionally the same in terms of growth. And one of the main reasons, I believe, is that you'll see a lot of the companies that raise media for growth funding, they co-invest, some of these funds, they co-invest alongside CVCs or venture funds. Just recently, one of the companies that we work with, Phil, they're based out of UK. They also raised from ITV AdVentures, and they just closed their Series A round where they have participation from many other investors. Media for growth deals, as I said earlier, they do fluctuate quite a lot when it comes to different macroeconomic times happening during those deals, and you will see that there's quite a steady increase over time, but then in 2020, right at the start of the pandemic, when the advertising spend decreased, we also knew that at the time there was less capital available in the market. The media for growth deals, basically, they've gone up. How do regions compare? I guess there's no surprise that we see most of these deals being concentrated in Europe. This is the birthplace of media for growth funding. But what's quite interesting, and what we're trying to show with this report, is that there are a lot of emerging regions that were lagging behind, and they're just coming up and doing more and more deals, such as Latin America, Televisa, who just completed the merger with Univision. They've invested in over 11 to 18 companies. Some of them are still in the pipeline, I guess. And then we have India, we already mentioned, and Southeast Asia, interestingly enough, with some independent funds such as Fay Media Global. Another interesting stat, again, not a surprise. Most of these companies, the first time they raised media for growth funding, they were at an early stage, but not too early enough to disappoint the customers. So you have to have a proven business model. Most of them, they were at a seed or a Series A stage. They already raised an initial round of funding. And that's really important, because when you go forward and raise TV advertising, you have to be at a certain stage of maturity, and you have to be in some of the major cities not to disappoint your customers. There are some more interesting stats, such as the average raise, which is what we found. We looked at 87 of these companies that have been acquired. It's a very, very small sample size compared to what's happening right now, of course, in a global traditional venture landscape. But we also have to remind ourselves that this is a relatively early model. The 87 companies that we've seen in our analysis that have been acquired, they raised on average $87 million, and that's 3 times as much than a traditional startup out there. And then we'll see when we hear from Chris as well, everyone probably thinks that this funding model would only work for me if I'm a consumer business. And in fact, of course, that's probably preferential. We have a lot more companies, including SaaS enterprise business solutions, that have raised such funding. And that's really comes down to what kind of media you have available and what your objectives are. The Times of Group India, for example, has over 700 million users. They can reach 700 million users daily. They can offer from print, TV, outdoor, and many other channels. So as long as you have the flexibility in choosing what works for your business, it is possible to raise, even if you're not a consumer-facing business. And Chris will also explain how they've done it at What 3 Words, which essentially it's a B2B2C company. Startups backed by both media and VC investors, according to our analysis, they reached the exit round via IPO much faster. If we actually think about it, a strong brand equity, we've seen it in other studies as well, they relate directly to the stock prices. And then lastly, some of the most popular industries where we've seen these deals being concentrated, it's e-commerce, digital health, fintech, food, and beverage. But we have a lot more industries emerging, such as gaming and edtech. So just to conclude this initial part, I know there were a lot of stats, a lot of information. There's a lot more in the State of Media for Growth report, which just gone live earlier this morning. I believe it's important that founders know of more diverse funding options, such as Media for Growth. And to know that despite what's happening right now in the market, I know in times of economic downturn, you just think probably of cutting back on spending. Marketing is the first line of cost you're probably going to think of cutting. There's always a possibility of keep on increasing your brand value and potentially revenues as well by using other funding options. So on that note, enough with the boring part. I met Chris 15 months ago when he was just announcing, I think it was the closure of the ITV AdVentures fundraise. And since then, I had an incredible opportunity to follow his growth, and I'm so much looking forward to see where it goes. He will tell us exactly how What 3 Words works, but this is a brand, a company that has been used by some of the world's largest brands, from Mitsubishi, DHL, Lonely Planet, also just recently in Austria with Arbro, and it's used for making sure that you, for example, as customers, you get your belongings and everything that you order in at the right time, but also for saving lives, as we have many more examples like that in the UK. So before I invite Chris on stage, I would like to leave you with a short video, quite a funny one, of how you could potentially use What 3 Words to make sure that whatever you order just reach your home safely. Let's play the video.
Hi, Gwen, right? Benji, I live just...
Benji, of course, from...
Yes. Hi. Bit of a weird one, but you haven't been getting any of my parcels, have you?
I love, can't say I have.
It's just I've ordered quite a few things online recently, and with our addresses being so difficult to find, I can see why it might get...
I'll let you know if anything arrives.
Chris, would you like to join us on stage? Maybe a round of applause as well. That was a award-winning ad. Which campaign was that one?
So, I mean, we produced a lot of that ad in-house, and it's got classic British awkwardness. Was kind of the theme that we went for, which I hope came across. Two people just awkwardly at a door, not really saying what each other thought. But yeah, it's now won a bunch of awards for creativity about highlighting the problem of bad addresses, which is what we hope to fix with What 3 Words.
So on that note, I mean, I think everyone knows that with What 3 Words, you basically just divided the word on a 3x3 square meter. I think that's pretty easy to understand. But how does it actually work?
Sure. So, I mean, What 3 Words is pretty well known in the UK, but may not be so well known here. So I'll just explain the concept that we take the whole world and we divide it into these squares, as you say, of 3 meters by 3 meters. There are 57 trillion 3-meter squares in the world. And we name each one with a combination of 3 words. So something like table, chair, spoon, or coffee, banana, custard, literally.
Are these actual...
Yeah,
they actually exist.
These are the actual names of our 3-meter squares. So everybody here's house. We have named with 3 words for your front door, for your back door. They are unique. They are fixed. You can't change them. Every 3-meter square in the ocean, the North Pole, they've all been named. And we do this because we think it is easier than a latitude and longitude, which is 16 digits, which is quite complicated for the average human brain to remember. So just by saying index home raft, I'm now talking about a 3-meter square in the world somewhere, and I can use that for my delivery, to put in my car navigation, just like you would do a normal address. And if you live somewhere like I do on a farm in the UK, where your address points to the middle of a field, we don't get any of our deliveries at my house. No one ever finds my house. It can be very useful for you. In many places, addresses work. That's okay. But in many places, addresses don't work. And that's why we think that 3 words for 3 meters is a nice global solution.
Yeah, or you can use it probably as a board game, as I recently did with some friends. We basically just came up with a random combination of 3 words. We found that actually existed. And then the other person started guessing where that location was.
Yes, it's a good way to get to grips with what we do. You can literally type in any 3 words into our app, and you might find that refers to a tree in Finland, because, pretty much any 3 dictionary words combination will refer to somewhere. So it is how the system works,
Yeah. So I think it's quite interesting for everyone to know how you started, because you have a really interesting background. We talked about that a lot. I don't know what's with musicians these days. I feel like some of the world's largest entrepreneurs, I know Paul Allen, Steve Wozniak, they're all, they were musicians at heart. And I know that was basically how you originally started. So how this actually all started for you? How did you come up with What 3 Words, and what were you doing before then?
So firstly, as I said, no one can find my house. And after years and years, that gets to you if no one can find your house. And then I started a music business. We did music for events around the world for 10 years. And musicians, you're always going somewhere new every day. And you're often trying to find the back entrance of a stadium or some entrance to a festival up a country road where there's no name. And I was the guy giving the schedules out, and I would always have to put, follow this postcode, but then turn left because it's not right. And I tried to get the London music business to adopt GPS coordinates and failed. Guitarists don't like using GPS coordinates, I found. And so I guess my idea was, can we find a way of simplifying this so that my musicians, my mum, anyone can use something as precise as latitude and longitude, but is much simpler. So I chatted it through with my friend who's a mathematician, and his brain was great. He just said, let's use sequences of dictionary words, and I think there's enough combinations of 3 words to fill every 3-meter square in the world. Turns out he was right. And that's how the idea was born, and I just thought, that's awesome. Let's run with it. So we did.
And this was how many years ago? Was it?
This was 2013, 9 years ago.
9 years ago. So you're playing in a really interesting market. I don't know what the audience thinks about right now, but probably when you think about GPS coordinates, you might be thinking of Google Maps, I guess. So it's a very, it's one of those markets that we call winner takes it all, I guess. And for What 3 Words to really work, you need the power of consumers on your side. And I think your approach, your team's approach to marketing is quite, I guess, less conventional than what we see with the usual B2B companies. How did you how did that come about?
So, what 3 words, and it's a good clarification when you say people think about maps and mapping apps. So we don't make maps, we don't make navigation, we just made a layer of 3 words that convert to coordinates, and that's it. So we work alongside those products. So what we're trying to get people to use is our system, not so much an app. We do have an app called What 3 Words, where people can find the 3 words for your house. But really what we're trying to get people to buy into and have awareness about is that the system exists. And for that, you need widespread consumer marketing. So when we started, people would say, that's a neat idea, 3 words for 3 meters. That's kind of elegant. But, I'll use it when someone else uses it. It's one of the biggest chicken and egg network effect kind of problems you have to solve. You make a neat idea, but everyone has to use it. And so to achieve that, we have realized and understood, and you try a few things when you start, you need widespread consumer adoption. You then need places for people to use it, because our app alone is not enough. They need to be able to use it in their delivery app and their car navigation system and their ride-hailing app. Otherwise, they don't have real-world use cases for it. So we had to do all of this at the same time. We cut the business in 2. One half deals with consumer, one half deals with business. But the consumer bit has to come first. And now in the UK, What 3 Words is basically a household name. If you know somebody who's British, I'm pretty sure they'll know What 3 Words. And then it makes it massively easier to get the business side working.
So when you originally started promoting What 3 Words and increasing the app installs and the awareness, you probably thought of, okay, we're going to use digital channels like any other startup does. But then you probably very soon realized this will only get me that many installs or that much awareness. And then you took that leap towards TV advertising with Channel 4. I was back in 2018 or?
So we did a bit of a mixture. So we did digital channels, 2018, 2019. We also had a huge boost from our emergency services in the UK. 85% of police, fire, and ambulance services, you can call 999. If someone has a heart attack in a forest, you can say, I need help now at ... They have it in their control room systems, and they will come and rescue you. And they also generate a lot of publicity for us and tell the public, have this app on your phone. And so that was an amazing publicity driver, and so was our digital channels. And right when we were going really big on digital, as anyone who runs digital ads will know, your costs will rise as you do, your creative starts to fatigue, and then we were thinking, okay, we need to do more than just digital. And it was a bit of good fortune. We got an email from Channel 4 saying, would you consider media for equity, which is not a model that we knew about, but we were thinking, hey, we might have to do TV. We don't really know so much about TV. But then we spoke to them and we said, well, look, this could be an interesting model for where we're at.
Were you skeptical at first, or your team was, about TV advertising?
I think when you're used to starting with digital, as companies these days are, you get these amazing metrics of all the platforms. You'll know exactly what hours your ads were served, to who, how long they watched it for, what they did afterwards. And then when you look at what TV offers you, which is kind of, it goes out for this month, and you just sort of look at the month stats, your immediate skepticism is, wow, this is really like vague reporting. How do you know if this works or not? And you have to spend a lot of money because you've got to spend, 100 grand plus to make your ad. You've then got to spend a decent amount to just try it. And if it doesn't work, that's a really expensive experiment. So I think that was our skepticism. We sort of knew and hoped it worked. Our CMO and people in our marketing team had been veterans of the advertising industry when TV was a really central part of any consumer campaign. So we had a good feeling it was going to work, but you're obviously just a bit itchy to go, okay, can we make the jump from digital and the amazing stats to TV, where it's going to be more of an experiment. But I guess doing it for media for equity, the way that it was offered. You get a discount, which is good because the TV channel wants to sell ad space. And so we thought, great, if it's discounted, we'll work really closely with them. They'll be invested in us. We can closely monitor this campaign, get some good stats. We'll give it a try. And it worked really well. Our first campaign we did with Channel 4 was amazingly successful. And then we thought, okay, this model works.
Do you remember what stage were you at in the company's growth when you first did the one with Channel 4?
So we had raised our Series C, we'd raised the first part of our Series C round, and so this then became an extra part of our Series C round on top of that.
So when you say that the campaign was successful, and obviously the Channel 4 one was the first one, and then ITV, I think, happened just a couple of years late, 2020, I believe. And then German media pool followed shortly after that. And most recently, India, Brain Capital International. I mean, clearly there's, the first one probably worked pretty well. You try to replicate it. It's quite, what I like basically about the way you approach this is that when you go into a massive market, for example, like India, you also had that media growth engine supporting you already. So it's you use that to also launch in the market, right? What were the things that it felt like it was working for you, and in what way you benefited from this?
So when we did the first campaign with Channel 4, we ran an ad which was very focused on emergency services and why you should have the app on your phone. And that's a classic direct response ad. You want people to see the ad, take an action, which in our case is download your app. So the way that we could get good stats is that you just look at your app installs 10 minutes after your ad runs, and you need to get the timings back off the TV company. Not always simple, but you can get it. And you end up with a cost per install on TV, which sort of resembles what you would get on a digital platform. And we found that already in the UK, given that the country had been exposed to what 3 words for emergency services, seeing our ad on TV would tip people over into going, okay, I'm now going to download the app. So that very first campaign was very measurable because of the purpose of the ad was download it now. Ones that we've done after that, and let's say in other countries like Germany, when we're using TV as a mechanism to start our market entry, is we want to build a bit of awareness. You're not necessarily saying download, you just want to explain the system. And whilst 3 words, 3 meters can sound simple, it can be tough to get that across in a 30-second ad. So you're just trying to explain a system and not necessarily want the viewer to do anything. Ideally, they then see a digital ad from us in the same week and then might download the app. So you start to measure it differently by doing user awareness polls to go, how many of the countries are aware of us, this kind of thing. So the German strategy has been a little bit different. And we also started doing other channels. So we would do outdoor as well. There'd be billboards around key German cities. That also helped us with our business deals we were doing in Germany because your business contacts will see them as well. So it hasn't been like for like in the different markets. And actually the ad that you just played in the UK, that as an ad which has worked for us really well because now pretty much everyone in the UK knows what 3 words does. So it was the first time we decided we're not going to explain our system in an ad. We're going to have 2 awkward people talking about a delivery problem and just go straight into the assumption that everyone knows what we do. And at that point, you get to have a bit more fun. Because if you're just explaining a concept, you've got a limited ability to have fun if you're explaining a concept. But now we have a bit more fun because we assume knowledge of the system. So these campaigns have all been slightly different.
Yeah, and I think, what you just said now about the original campaign and being more practical at explaining what the product does, I think this is where TV is quite successful when you have more of a difficult business model perhaps, or you're a marketplace, or you're building, a fintech app. Klarna, for example, did some TV campaigns, and actually just before Pinterest did their own, it was a time in 2013, I remember, even Facebook and Twitter had TV ads. So I think that's really great. When the campaign you did in India, I think that's pretty interesting because it's not just about consumers, is it? I mean, you can have some of the most strategic partners just coming across your billboard and like, what is What 3 Words? Let me check this out. What was your experience like? I mean, such a different market from everything that you've done in Europe so far.
It is, and India, yeah, 1 billion people. So to get consumer network effect, where everyone's heard of you, is pretty tough if you're trying to do a market of 1 billion people. So what we're trying to achieve is some good level of consumer adoption, but also interest and awareness amongst our business targets. And so with the Times of India group, which is Brand Capital International, who we did that deal with, a lot of their media assets are business focused. So the Times of India newspaper is read by the business community. So we will do a lot of ads in there, as well as stuff which general consumers will see. And then, for example, airport billboards. Airport billboards we're a bit unsure of, we've never done them before, but they're great. People are sitting bored, normally waiting for their flight, and they'll just be staring at your ad. And our system actually works very well for it, because it's quite conceptual. It's like 3 meters, 3 words. People are just staring at it, like, what is this? Then they'll take the time to download the app, play around. So it's been a remarkably effective tool for us. And of course, the people who are flying regularly, more likely to be business people. So again, once that call comes in from us to a delivery company in India going, do you want to make more precise deliveries with What 3 Words? They're like, yeah, I've been reading all about this. I do. And they have a chat with us. And then they say, how many consumers have you got? And you say, well, a lot, because we've been running consumer ads around the country. So that campaign and the sheer volume of assets that Brand Capital International or Times of India have is really good for a company like us who are trying to do half consumer, half business in a single campaign.
I just got so many questions to ask, because I know so much about What 3 Words, and I know all the different campaigns that you guys you've been using. I'm just mindful of the people listening, especially if you are maybe a first-time founder. You're just thinking about, okay, media for growth. It's an interesting concept. How do I even get started? Or what are the things that not everyone really talks about? Like, what are the things that you felt like after doing the first campaign with Channel 4? You've learned, like, for example, creatives. I think like it's such an important part of your campaign. It could literally just break your campaign. You could make it or break it. And it's not cheap, is it? And sometimes you have to factor that in the cost for creating those creatives.
Yeah, so I guess one thing I've learned, I mean, it's very helpful to us. Like, of our 170 people at What 3 Words, a lot of them work in our marketing team, maybe 40 or 50 or something, which is a pretty big marketing team. We're making a lot of assets in-house. And so what we'll often do before we put it on TV is we will run a few variations of it on digital channels, of which you get same-day feedback. And you go, is variant A better than variant B? So by the time you actually send your asset to the TV channel and go, this is yours for 1 month, it's locked in, you've got some feedback based on how it performs on digital channels. But it doesn't follow that an ad which works well on digital will work well on TV or vice versa. But you're still just getting some kind of feedback if you've got a good engine that you can go in straight away. And if you do good translation and localization, you can even go, right, how does it work in UK? How does it work in Germany or other markets? And just pick up some data which makes you adjust your ad a bit, calls to actions, anything like that, before you take the plunge about going forward. But I would say for any companies thinking about doing media for equity, media for growth, I would say be really pretty experienced at running digital and about that engine, making creative, knowing what works for your company. Otherwise, if you get it wrong, it's going to be expensive if you put a lot of money into one TV campaign and you haven't got it right.
Did you experience any hiccups or moments where you felt like, that didn't really work out the way we wanted?
Yes, actually, when we ran one, we sort of copied and pasted our UK ad in the US. Different actors, US setting. It wasn't literally running the same ad, but I would say it didn't quite have the same ping to it as it did in the UK in terms of the results. And I think localization's really hard. I can think something's really funny because I'm British, and I can think that Americans will find it funny, and I can be wrong. And if you make an ad in Japanese or Korean, I don't speak those languages, and you have to put a lot of faith in the people that you're hiring to tell you that your ad is funny, especially if you're going for a funny ad. And it's really odd not being able to validate it yourself, which is kind of why I'd say it's extra important to run more tests. But yeah, I think that there are some, and you know, we're scaling up in 6 countries simultaneously, running at the speed of light, making all this creative, localizing it all. Some have worked better than others. But I would say 90% are working really well. 10% you look at and go, we could have done that better. But I'm pretty happy with that ratio given the rate we're going, the speed we're going, and we have a really, really good marketing team, creative team who generally get this stuff right first time, that we're very grateful for.
Yeah, I mean, I think your team is amazing and extremely efficient, and we talked about that actually at length. When it comes to the media funds that you partner with or the media broadcasters, apart from the actual transaction, that would happen in probably a very traditional fundraising round, is there anything that you felt supported with, or is it just simply the media that you receive from them, or do they act more as a strategic investor to your company?
I definitely think that they treat you very well in terms of helping you get the best campaign. And as someone coming into this who didn't know much about TV advertising before, and you know, you can be just given your TV slots, and if you're not sure what you're hoping for, that's going to be difficult. But what they'll really try and do is get you spots with diverse reach. So what you don't want to do is just be on the same ad break at 11:30 p.m. every day in the same show. You're going to hit 20,000 people many, many, many times who are going to get very bored of your ad. So that's one end of the extreme. What you want to do is couple that with getting your big Saturday night, everyone's on the sofa show where you reach a huge part of your population once, and you want to really push for those slots and get them. And so I think just having a better strategic relationship with the media owner, you talk through that. You say, hey, what's coming up? You know, in our case, it was things like you've got the football Euros, the World Cup coming up, and you go, wow, a lot of people are going to be watching that. Can we get this spot? And they will fight for you internally to make sure that their portfolio company gets that spot. If you're just a cash-paying customer, it is harder to get the same, and you might just be having to take that 3 a.m. slot that you didn't really want. So it's a non-exact science, is kind of what I've learned about this world. And if the media owner isn't your investor, A, you get the discount, and B, you're generally going to get probably a better set of programming.
I mean, obviously, because I guess it's, you know, they have vested interest clearly in your company then, so they want to make that happen. Perhaps this question should have come a bit earlier in the conversation, but if we relate to any deal, you don't even have to mention it. Can you walk us through how that actually works? Maybe from the due diligence to setting up the media value, transaction itself, just so that everyone understands practically how it works.
Yeah, so actually a media for equity deal is slightly more complicated than pretty much every other deal you do. Not insurmountably, but you're effectively doing 2 deals. You're doing one, and it's kind of odd because you're sort of selling to each other. You're selling them the investment, they're trying to sell you ad space. And so you have these sort of funny phone calls where you're sort of co-selling to each other. But the general structure is to make 2 deals, but also link them. And just things about when shares are issued is a bit non-conventional, because normally you would do an investment deal, money comes in, shares are issued. That's not quite the same in media for equity. And if you've got existing investors who are not familiar with the model, they might look at it and go, that's a bit odd. How is this structured? And then they need a time to get comfortable with how it's structured. And so also having done probably 5 of these deals now, they have 5 totally different contract models for how these are done. I guess
it's different in every country. Right?
It's different in every country, and even in countries it's different in every case. Also something to bear in mind with media for equity, sometimes you get 100% in that no cash changes hands. And sometimes it's a bit and both. You might have 80-20, so you have to pay 20% of it in cash, and you pay 80% of it in your shares, something like that. So all of these are slightly different deal by deal. It's a bit complicated, but it's not insurmountable. You'll get there, but I think I wouldn't assume it's just a quick, hey, sign the last docs, everybody signed. It's not going to be like that.
And what you just said right now about, I think that's perfectly the way you describe it. Essentially, they're trying to sell you advertising space. You're basically trying to explain how much of an attractive investment opportunity you are. But another thing that I found interesting from, speaking to you and other founders is, do you find it difficult to get into one of those meetings and you have the founder cap and you're thinking about valuation and investments and you approach that as an investment opportunity, and then your CMO comes and but we need this much and this much to actually get to that point? Has there ever been some kind of contradiction between how much you actually need for the marketing campaign, but how much you actually want to raise in line with your company valuation, how much you want to give away?
Yeah, it's a fair point, because the media owners who do these deals, they want to normally do kind of a specific range of money. And often as the startup, you probably want to go smaller as well. You want to do a smaller test, check it works, and then do more. And they maybe want you to commit more at the start. So you have to try and find a middle ground in there. And I think, just that notion of also the split. So with some of the media owners, then there's some TV, some radio, some out of home, and their deals are structured in a way where you're probably encouraged to do that split in a way that suits them. And you have to then push back if you think that your product is going to go in a different way. Also one example with us, What 3 Words as a concept, it might have taken me about a minute to explain it at the beginning of this, a minute and a half. And when in some markets people go, well, adverts are normally 15 seconds in this market. And we say, we cannot explain What 3 Words in 15 seconds. It's not possible. We've tried it many years. You need 45 seconds or a minute or longer. And they'll say, well, it's very irregular to run a 45-second advert. And so sometimes we get hung up on the first call, and I'm sitting there going, I want a 45-second ad. And it's kind of become this famous thing where Chris wants to run a 3-minute ad. And the media owners are like, this isn't unheard of. And so we do often agree a middle ground, but I think just knowing your own company, knowing what works, and not being afraid to be a little bit pushy, like in our case, ad length was one of the key things we pushed for. And funnily enough, in the ad that we started with, there is a 30-second version. This was the 40-second version, and all you get in the extra 10 seconds is more British awkwardness. The 30-second, we just cut 10 seconds of like awkward squirming. But for me, the extra 10 seconds of awkwardness is kind of what makes the ad, and maybe why it won the awards. So I think fighting for your particular, what works for you, is important, and often you'll get there.
Do you expect this kind of funding model to pick up more now, given the current market conditions we are in right now? And we talked about this, but how do you actually feel as a founder and running What 3 Words? How does it feel like for you? We've seen many valuations being slashed. Everyone talks about this correction in the market. Of course, different founders at different stage of growth, they experience this differently. How is it like for you? What's the sentiment like? And do you see yourself using this kind of funding option in the future?
Yes, for sure. You had a slide up earlier showing, I think, the rise in corporate venture capital units, and TV companies, media owners are just like other companies who are starting corporate venture capital. It's just that cash is not changing hands, their asset is changing hands, which is the media. Every business out there is now becoming more creative about how they want to invest in startups, and this model is very good. Also, what's happening in the downturn is that traditional media owners are feeling it because people are spending less, so their revenues are going down. So they are thinking, well, hey, if I can still get people spending with us, if we don't earn it in cash, but we'll earn it through equity in their companies, if you're a media owner, that's probably quite an attractive idea. So I think that's why we're seeing so many media owners starting these venture capital units, which are effectively media for equity. So I think whilst funding is in a really tricky time globally, and everyone's thinking, well, look, I still need to acquire consumers, need to acquire businesses. How can I do it? If I don't want to pay in cash, can I pay in equity? This model's a really efficient way of doing this from both sides.
I've just been told that we would have to wrap up soon, but before we do that, does anyone have any questions for Chris or about what we just discussed right now? No? Good. Chris, it was lovely having you here. Thanks so much for sharing all the wisdom and insights that you've gathered over the last few years. Where can we find What Three Words?
What3words.com or the What Three Words app. Download it, find the 3 words for your front door. I hope you like them. It's in 53 languages, not just English. But yeah, thanks for having me, Dan.
Thanks so much. And if anyone is interested to have a chat later about what we just discussed or interested in the findings that we touched on earlier, you can find in the report, or you can just find us in the networking area, grab coffee and chat more. Thanks for your time, and I think that's it for us.
Thanks, guys.
Thanks so much.